What is going on, investors? Hopefully you guys are doing well out there. That is right. It is time to talk about NIO Incorporated, ticker symbol NIO. If you're looking for an unbiased review of this company, I'll do my best to deliver that to you today because we have Q1 numbers that came in. We also got outlook for the upcoming quarter, the Q2 quarter. We'll take a look at that. We'll take a look at the revenue in the most recent quarter. We'll also take a look at how this impacts NIO's profitability, how the gross margins compare, certainly to like a Tesla, maybe some of the other competition as well. We'll walk through the balance sheet, see how well capitalized this company is. I think everybody's comfortable or realizes this company is not making money from an earnings per share perspective. They are losing money. Well, how well capitalized on their balance sheet is NIO? How well can they absorb these losses for a period of time? We'll talk about that. Obviously, we'll run through the profits and the revenues and everything from a fundamental perspective that you need to know with NIO. And then we'll get over here and look at this from a technical perspective. I tell you what, this one is setting up really interesting. And I tell you what, even if you're not interested in NIO, this is a pretty speculative stock. Obviously, it's a Chinese EV company. I mean, that's just speculative to a T. And maybe it's forming a bottom here. And so maybe you're not interested in NIO, but if companies like NIO are forming a bottom and maybe starting a new uptrend, well, obviously that could be bullish for the rest of the market as well. As these stocks like NIO come back, well, so will likely the rest of the market. Now, year to date, this stock's been absolutely hammered, down 43%. That's why when you surf YouTube, when you surf FinTwit, when you go out there and you look at NIO information, there are so many cheerleaders trying to pump this stock up, is because people are just been decimated by this stock. Year to date, down 43%. Over the last year, down 56%. This stock's been absolutely smoked. You have to stretch it out to a 5-year view to actually see some sorts of gains on your shares. And a lot of people, very few people probably own this stock back when it was a penny stock before really its massive uptrend kind of in the 2020s that it started to make. Now, in terms of the most recent quarter that came in, so we had our Q1 numbers came in, revenue came in at $1.56 billion. That was 24% year over year growth on that revenue side, beat expectations by about 80 million. And I think investors are kind of comfortable that this revenue and the revenue growth certainly was impacted by the events happening over in China. They have a very strict virus policy over in China, and they obviously we're seeing shutdowns and we're seeing starts and stops to the economy and factories, and certainly NIO is not immune to that. You also have supply chain issues getting those supplies to the factory, which may or may not be open over at NIO. Obviously, we're seeing this company battle through that, so their revenue and certainly their profits will be impacted by that. That is priced into the stock to a certain degree. The fact that you're having this difficulty is priced into NIO stock to a certain degree. The other thing that you have to realize is, look, you could sweep away the virus, you could clear out all the supply chain issues, and that certainly will be beneficial to NIO, but also it would be even more beneficial to its competitors like a Tesla, like a Li Auto, like an XPeng as well. So even as the tailwinds of clearing things out in China from a supply chain issue and from a shutdown of their economy perspective, well, it would be a tailwind to a lot of companies, not necessarily just NIO. Now, we also got Q2 outlook as well, expecting deliveries of their vehicles to become between 23,000 and 25,000 cars. You see, that is a relatively small growth over the previous quarter of about 22,000. In fact, that's just 5% to 14% growth year over year on those vehicle deliveries. On the revenue side, expected to come in just shy of about $1.5 billion worth of revenue in that upcoming Q2. That is just about 10% to 19% growth if they hit the top end of the mark, closer to $1.6 billion worth of revenue. This company is not growing that quickly. And when we have a market cap on this one at over $30 billion and no profits, these long duration assets, when you have interest rates ticking up, just are going to continue to get hammered. Obviously, there are some excuses you can make. You could talk about the vehicle mix over at NIO, the fact that they're kind of retooling and reintroducing vehicles that they think will sell better in their market, and obviously the factories being shut down, start and stop of the economy over in China. But I think what investors are really being turned off over at NIO is the fact that their vehicle margins and their gross margins are starting to to disintegrate. We see over the last year, vehicle margins have dropped by over 3%, and quarter over quarter, nearly 3% as well. We went from 21% vehicle margins last year all the way down to 18%. Off the top of our head, we should know that Tesla's much closer to 30. Now, we're not necessarily expecting NIO to be close to 30, but I tell you what, they're actually under 20. That, in my opinion, is a bad sign. You see quarter over quarter, you're seeing declines there as well. Now, your gross margins also disintegrating even faster than that, nearly a 5% decline year over year. You went from 19.5% gross margins all the way down to 14.6 last quarter, just a quarter ago. You were at 17.2. This company is losing money. You see on a net loss basis, this is in the Chinese currency, so about 1.7 billion RMBs. When we come over here and look at it from a balance sheet perspective, not necessarily something to be overly concerned with at the current time. Our second column is our most recent quarter. These are the most up-to-date numbers. They have plenty of current cash on the balance sheet. They also have some short-term investments as well. They have plenty of cash to absorb. 1.8, 1.9, $2 billion worth of losses in a quarter. That's about the run rate it looks like NIO is operating under. Quite frankly, they could operate under that environment for about a year or really 2 years before this balance sheet really starts to be really a big concern. So nothing to really be concerned with there. They do have some debt and some long-term and short-term debt on the balance sheet. That has certainly bolstered up their cash position, but that's not really something that I would be overly concerned with yet. The fact that they're mounting losses, they're able to afford that from a balance sheet perspective. Now, what is concerning me is the fact that we have our vehicle sales. Our far right-hand column is our most recent quarter in United States dollars. Next to that is the most recent quarter in the RMB currency. We had about $1.5 billion worth of vehicle sales. We have another $100 million in other sales, probably parts and accessories. So you get a total revenues at about $1.5 billion. Here it is in the Chinese currency, closer to $9.9 billion. Now, unfortunately, you have a lot of cost over at this company. Vehicle sales costs come in nearly at $1.2 billion. Your parts and accessories coming in at $141. That means your total cost of your sales coming in at $1.335 billion. So you minus that number off this 1.56 and you get to an operating profit of just $228 million. So off of $1.5 billion, I think I misspoke. This is actually your gross profit because we haven't talked about R&D and selling general administrative expenses. Your gross profit, just $228 million. Now, unfortunately, you have R&D expenses, and you see over the last year how much those accelerated. In the Chinese currency, you went from 686 all the way up. You added over 1 billion RMBs to your R&D. I mean, that is just really accelerated. Now, selling general administrative didn't accelerate quite as much. It went from 1.2 billion up to about 2 billion. Again, that's in the Chinese currency. In the United States dollars, you take this 228, you minus off your research and development fees, which came in at about 277 million. Then you minus off your selling general administrative, which came in at about $317 million. And you get down here to total operating expenses at $573 million. So you guessed it, you take 573 and you minus off 228 million in gross profit and you get a negative $345 million loss from operations. And this is the calculation that most investors are going to make. They're going to come over here and look at vehicle margins, which are on the low end of where you'd probably want an EV to be, and you've got we're talking about a massive 30 billion, 30 billion valuation on a company that's growing south of 20% in the upcoming quarter. The Q2, we're going to grow maybe even low single digits on that revenue side. So you're paying a premium market cap, a premium valuation. On top of that, you're not getting premium gross margins. And in fact, you're losing quite a bit of money, and it doesn't look like it's going to turn around anytime soon over at NIO. These financials don't paint a very good picture. Now, what does paint a good picture, though, is from a technical perspective, this has found some footing down here at about $14, $15 per share. You see more recently, we'll zoom in kind of on the more recent price action. This stock was in a pretty hefty downtrend, and we've seen this with a number of different stocks. I mean, from Facebook to Netflix to Nvidia to Uber. I mean, we've seen dozens and dozens of stocks that that have gotten in this channel, we've talked about it numerous times here on the channel, that you're looking for this stock to actually break out above the top end of this channel. And quite frankly, that's actually what NIO has done. So from a technical perspective, this has done something interesting. Now, does it mean this downtrend is over? Does it mean you can just step in here and buy this dip on NIO? No, not necessarily. Longer term, we made some highs back in 2021, all the way up here at $68 per share. We made a lower grouping of highs back here in June, close to about $53 per share. Another lower cluster of highs down here at $43 per share. So NIO, quite frankly, could rally pretty hard up here into the $20, $25 per share range. But if you don't really get over this downward trend line, kind of this longer term uptrend, well, we have to assume that this stock is just still kind of locked in that. You also have some overhead supply here that will come into play closer to about $32 per share. So even if you were to break up above kind of the longer term trend line, I would expect some sellers to emerge maybe up here in this $30 area. Now, I have this volume profile. You notice here on the left-hand side, some of you have been following this channel for a while, might not have seen something like this. I turn this on when I'm trying to see if a stock is starting to bottom. And what this is showing you is where the volume is with this stock. And the volume, quite frankly, is down here at south of about $20 per share over at NIO. This is where the buyers are stepping in. So that's where, if you can get some momentum on this stock, look at how the volume kind of shrivels up over from 24 to about $30 per share. There's not a lot of volume. Well, guess what? If you can get momentum in this stock, it can slice through this price action because there's just simply not going to be a lot of sellers here. Certainly not as many as you see down here, lower than $20 per share, and above that up at $40 per share. So from a technical perspective, there's certainly some trade setups here. There's certainly an area of support for the stock down here at about, we'll call it about $14, $15 per share. I could see someone making the argument that your downside in this one is probably back to 14, 15, and your upside is, quite frankly, maybe up into the 24, 25, maybe as high as over $30 per share on this one. Again, this is from a technical perspective. We just went over it from a fundamental perspective. The vehicle margins, the losses, the excessive valuation from a price to sales, certainly from a price to earnings. Any traditional fundamental analysis you do on NIO, it's saying it's overvalued, and it's overvalued by a lot. But from a technical perspective, there are some things to like here. Now, on the downside, the bear case with this one, obviously it's been making this massive downward move. Well, you would not want to see this one break below 15. If you do, you are headed back into penny stock territory with this one. South of, I would assume, probably $5 per share. So some of you that have been in this stock for a while and it's painful, you've lost 40% of your balance just over year to date, you don't want to lose any more money. Well, you need to set a stop loss down here, $12, $13, $14 per share. You break through this area and the momentum on this stock and the volume profile is just going to absolutely shrivel up. The buyers are going to dissipate and you are going to see the stock head down to, I would assume, $4 to $5 per share. In my opinion, that's probably the likely outcome because from a fundamental perspective, there's not a lot to like here. On top of that, you have all this Chinese regulation, delisting risk, political risk, just too much risk when it comes to a stock like this. Quite frankly, I think you could take your dollar and go put it in a stock like Tesla and sleep a lot better. You'd have a lot of volatility left, but you'd probably sleep a little bit better. That was NIO. Hopefully, guys enjoyed today's video. Back in soon with more. Good luck with your investments.